the market for institutional demand of crypto is hotter than it's ever been. I think ETF flows are going to accelerate. I'm feeling pretty bullish. Everything is an ETF. Yeah, that is exactly right. And so everything's going to be in crypto. We're going to see single assets. We're going to see index-based. We're going to see thematic. We're going to see levered. You're going to see all of it come to market. Most crypto investors have a very specific opinion about individual assets. And most TradFi investors, as I said on my panel here, don't know how to pronounce Solana. For the first 7 years I was at Bitwise, the only thing you could talk about in polite company was a 1% allocation. Yeah. Morgan Stanley just put out a paper saying go up to 4. People are not optimistic enough about the scale of these markets that these things are going after.
Nothing said on forward guidance is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice, or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.
Here we are. Matt Hougan.
Thank you.
CEO of Bitwise.
Yeah, I'm glad to be here. Thanks for having me.
Yeah, you're another one that I always try to catch at these conferences. We chatted at DAS New York last, I think, in March.
Yep.
And at that time was a really interesting one because we were talking about how all of crypto Twitter was super bearish at the time. And then just walking around the conference, all the institutions were just so fired up about stablecoins, ETFs, Bitcoin, everything. And that was mostly proven correct in terms of the direction. And yeah, here we are again.
Here we are again, and institutions are still just as fired up about Bitcoin, stablecoins, and tokenization. In fact, I'd say they're more fired up. We even have a term for the Bitcoin trade now on TradFi, the debasement trade. So it's been officially branded. That's sort of a stage of maturation. And then there's the stablecoin trade. But yeah, I would say the market for institutional demand of crypto is hotter than it's ever been. I think ETF flows are going to accelerate. I'm feeling pretty bullish.
Right on. Yeah, I was reading your latest notes. You write a weekly newsletter, and you were saying that you thought, I think this year's ETF flows were going to surpass 2024, right?
That is right. Yep.
What's the thinking there?
Well, for one, I should say that's the norm in ETF land.
Right.
So I come from an ETF background, right? I was CEO of ETF.com before I joined Bitwise. Usually in ETFs, year 2 is bigger than year 1, year 3 is bigger than year 2, year 4 is bigger than year 3. That's for 2 reasons. One, big institutions take a time to okay ETFs. Right. So like in Bitcoin land, Morgan Stanley just said 2 weeks ago that their advisors could buy Bitcoin ETFs. So you have new markets that open up. And the second one, which is just so obvious, is like, what's the first time you bought Bitcoin? Have you bought Bitcoin since then? I bet the answer is yes. I bet you didn't just like one and done.
Yeah.
So even the people who bought Bitcoin ETFs last year are buying them again this year. Yeah, I really think flows are going to accelerate hard into the end of the year.
Is there anything particular about what we expect of a wave of altcoin ETFs that stands out to you as being, impactful to the market, aside from, broader access to these tokens, but, things that aren't being talked about and how important they will be for maybe market structure or flows or...
Yeah, probably 2 things. So from a flows perspective, the one thing I would point out is that there are some blockchains, protocols, assets that occupy a bigger space in people's minds than they do in a market cap perspective. So I'd talk about Solana, for instance. If you look at the coverage at Blockworks, the ratio of coverage between Bitcoin, ETH, and Solana is not that different. But from a market cap perspective, Solana is 1/5 the size of ETH and 1/25 the size of Bitcoin. Why does that matter? It matters because even a little bit of flows into Solana ETPs could significantly lift the market. So that's one thing I would keep in mind. From a market structure perspective, the thing that's happened in Bitcoin, as an example, is ETFs have become effectively a layer 2 for Bitcoin, right? There's a lot of trading and transaction in Bitcoin ETFs that doesn't manifest on chain. You can think of it as almost separating investment transactions from real world transactions. I suspect we're going to see that in these other places. And that's actually robust for the market. We don't necessarily want Solana consumed with investment related activity of SOL tokens. That's great if it happens on ETF land. So I think ETFs are very complementary from that perspective.
it doesn't inhibit the revenue potential or fee profile, you don't think?
Well, it does a little bit, but I don't much care about that because I think people underestimate the size of the market that something like Ethereum or Solana is going after.
Right.
Those are enormous
Relative
markets.
to today.
Yeah.
We always have a bias to forget how early it is.
It's so early. I mean, even people even do that just thinking about stablecoins versus tokenization. But just looking at stablecoins, right? The consensus is the market's going to 10 or 12x in the next 4 years. There's 1.8 quadrillion payments a year. Quadrillion. Like, how many times have you used that word? Never. So the size of that market is just so large that I don't mind if, like, me trading my SOL or ETH position takes place in ETFs. That's probably good.
Yeah. So I want to ask, that headline came forth, I think it was about a month ago, that went under the radar, which is just this change around the ETFs. Obviously, when they first came out, there was this idea of cash versus in-kind. And correct me if I'm wrong, this is your world, but there was a change to that ruling, right? And what does that actually mean for that change?
Yeah, so cash versus in-kind means how ETFs are created. So for instance, under the way Bitcoin ETFs were first approved, it was called a cash creation. What that meant is effectively when an authorized participant wanted to create shares of my ETF, they would give us cash and we would have to go out and buy Bitcoin. In an in-kind creation, they give us Bitcoin and we give them shares. The reason that matters in sort of phase one is it makes it easier and more liquid and lower cost to trade Bitcoin ETFs because it's just fewer steps and less slippage.
Yeah.
So it makes it incrementally better. What eventually the world hopes for is that individuals could in-kind and create. That's still a ways away, but just doing it on an institutional level makes the market more liquid. It's also just another signal that Bitcoin ETFs are treated like every other ETF. Right, so it's a normalization. That's how most of the market works. So it's a positive, but it's an incremental positive. Yeah.
I don't want to go into Friday too much because it's just, I think it's a lot of noise. We've talked about it a lot. But from a traditional institutional allocator's perspective, does that interfere with, there's the narrative with this wave of potential altcoin ETFs, does that interrupt either approval or excitement at all around those?
I don't think so. I mean, first, it's worth noting from a price perspective, Friday didn't happen to institutions.
Yeah.
Right.
Yeah.
The market closed at 117 Bitcoin and opened at 115. No big deal. From a excitement perspective, look, I love the perspective that crypto broadly passed the stress test on Friday. I know there were some issues on Binance. I know there were some issues on transactions being fulfilled, but broadly speaking, it passed. So I don't think it dulls excitement. We're also in ETF land. While we're going to get a lot of ETFs, we're not talking about the long tail, right? So, Atom traded to zero. There's no plan for an Atom ETF, right? So I think if anything, it was a pretty good stress test, and I think we passed pretty well.
Yeah, that makes sense.
Yeah. To that point about this, there's this change to the SEC recently where they made it so. Again, this is just out of my world, so but this is why you're here. But there's this change to basically the guidelines from the SEC, right? So now they don't have to go through this long-winded approval process. It's just like, all right, you have a futures already. Okay, great. So then you can just list the ETF. Is that how it works, or what happened there with those changes?
Yeah. So the way it used to work is you had to go to the SEC and beg,
right?
And in addition to begging, you had to prove that this ETF was not subject to manipulation, which is sort of proving a negative, which is very hard to do. It took, 10 years in Bitcoin, a few years in ETH, and every single one had to go through this process. What they changed is they moved to what's called generic listing standards. Generic listing standards means if you fit a checkbox, then you can launch your ETF. And so, as you mentioned, if there's a futures contract that's been trading on a regulated exchange, including exchanges like Coinbase or Binomial for 6 months, then you're good to go, right? And that means we're going to get a dozen crypto assets roughly launched now, and then more futures will list, and we'll get, a few dozen. A fun fact from ETF land is this actually happened in ETFs. So believe it or not, when ETFs were first created, you had to petition for every single ETF. And then there was something called the ETF rule, which was put in place, which established this generic listing process. What we saw is that the pace of launches in traditional ETFs rose by about 400%. So 4x.
Now everything's an ETF.
Now everything is an ETF. Yeah, that is exactly right. And so everything's going to be in crypto. We're going to see single assets. We're going to see index-based. We're going to see thematic. We're going to see levered. You're going to see all of it come to market. Yeah. Not all of those will attract attention or flows, but some of them will.
Why isn't there a basis trade ETF? I've wondered that. And when I want to know when basis trade ETF and when ETH BTC ETF.
Yeah, great question. So on the basis trade side, there are some ETFs that do like traditional regulated option overlay and style strategies. It's hard to get into using perps in an ETF structure because you have the regulated, unregulated is like the blood-brain barrier of crypto, and it's hard to cross that. So that will still be a while, but not forever. On when BTC ETH, I think that's going to happen. We have an index-based product that trades sort of like GBTC that we've positioned to turn into an ETF. We're waiting for approval of that. I think that's actually going to be the second biggest category in ETFs after Bitcoin. Yeah. It's going to be Bitcoin, index, ETH, Solana, etc.
So useful then it opens up different strategies for asset allocators, market neutral, like long, short.
100%. And it's also worth noting, most crypto investors have a very specific opinion about individual assets, and most TradFi investors, as I said on my panel here, don't know how to pronounce Solana, right? So they are going to be better served with a broad-based basket, an index basket. If you looked at my index, you would find an asset that you hate, and therefore you'd be like, I'm not buying that. But if you're a TradFi investor, you don't know, and you just want exposure. And so I think that'll be a dominant way that many people gain exposure.
Isn't that leads to reflexivity where the high market caps just get higher market cap?
100%. I mean, you've seen that.
Passive in stocks.
It's exactly, right? Like that's the Mag 7 experience. And then when you get automatic investing through 401ks or 529s, you do see that. So I think there is going to be a on the run, off the run difference between these popular index products, and other people are launching them, not just Bitwise. But I do think it'll be a category defining difference and different valuation.
This is a separate topic and we can revert to ETFs if
bring it.
But I'm starting to see more talk percolate through traditional derivatives people, just totally non-crypto parts of the financial markets around perps and a lot of tunes changing as in some cases people are receptive and others they're like, oh, finally the one good thing that crypto has brought to is this perp model, that 24/7 and the updated funding, refreshed funding rates. And so, and it makes total sense also like why it's blowing up in crypto, because it's easier than other derivatives.
That's right.
Options and, good luck teaching
delivery on
teaching. Yeah. Good luck, teaching, random person and the sizing metrics of,
it's a nightmare.
Of CME contracts, things like this. So, what is the most, advanced? Where are you seeing this type of proliferation most advanced within a perp-ification of traditional markets?
Yeah, you're definitely seeing it. So you're seeing markets like CME start to investigate it on S&P 500. I think it's two things colliding. So one, it's the innovation of perps, which I do think is a real financial innovation. And the second thing is you have a retailification of the options market,
right?
Which traditionally was an institutional market, which could handle those large contract volumes, which could handle, various Greeks that didn't need to be WYSIWYG, where what you see is what you get. But now we have retail investors really embracing it. And you put those two together, I think you're going to see the perps market become a dominant way that people gain exposure to all assets. It's just a really nice, neat innovation. Yeah.
It's I like the 9 to New York market hours for it's good for mental health when you're active in the markets. So hopefully they keep that coming.
I would say enjoy it while you can.
Exactly.
The world wants to be global 24/7, 365. That's where I think we're going to go. I do think it's going to change market structure. One thing I'd note, it's hard not to talk about Friday. One thing I note about Friday is the Trump tweet came out at 5 p.m. That was 8 hours after China. The reason it came out at 5 p.m. is that's when you dump bad news on the market, so the market has time to digest it. But that's no longer going to be the case, right?
The thing now that we're talking about it that actually just light bulb went off. You have, if you start perpifying all traditional, so S&P 500, all these things, you need banking rails at 6 p.m. on a Friday, and that's stable. Either Swift is on the blockchain, which we saw some announcements, whatever, but that's stablecoin.
That's stable.
You basically need stablecoins for perps.
You do
of S&P, whatever.
You need stablecoins. You need a different structural relationship.
That's actually wow.
I think that's going to happen too. And you do see regulated exchanges looking to permission stablecoins or assets like BITL as collateral, like as official collateral. And the 24/7, 365 market needs all the pieces of crypto to really operate. So I think you will get that.
The bull case for stablecoins, just our government's debt problem is enough to be a ginormous bull case. But then when you think of bringing on the tens of trillions in equities and gold commodities into perps that need settlement collateral, it's like,
and then it's all global brokerages. It's not like just like one exchange in the U.S. It's just like everything.
Yes, this is what I mean when I said that people are not optimistic enough about the scale of these markets that these things are going after.
It's actually
the size, the distribution. These are just enormous markets, and making them 24/7 will make them bigger. There'll be more transaction activity. So I think people underestimate.
We need the Men in Black thing to eliminate our being in cryptos.
All our negative bias. To kept us to this point.
Because everyone's like, it feels like you're in crypto, you're like crawling, just like you're like the boxer that's just gotten smoked a million times. And we had such a sea change just in 9 months in administration and adoption and everything. It's so hard to comprehend that magnitude. You're like on the front line, so you're telling the story, and people are like, "Oh, he's just the Uber bull," because but you're like, "No, I'm talking to these people who are their eyes are open, and they control." One of these guys press a button, and it's more money than all their crypto controls, and you're like,
that is exactly right. I mean, there's $110 trillion of global stocks.
Yeah.
That's like a very big number.
Right? I got to see the numbers on a piece of paper to comprehend.
26 times bigger than the crypto market, right? It's orders of magnitude. I think people miss that.
Insane. Talking about this idea of these exotic ETF structures, something I'm curious about is I'm a big fan of what Simplify has been doing, where they've been taking basically all these exotic derivatives that were basically needed in ISDA to trade them, stuff like 7-year swaptions. And what they do is they just basically put that in an ETF wrapper and then be able to allow retail to have access to that. I'm curious, what do you think about that idea of taking these more exotic things that were only for people with ISDAs and we have it in an ETF wrapper? Is there any interest in there from Bitwise himself or the crypto industry? What's your read on that?
Yeah, so generally speaking, I'm a huge fan of it. I've been a huge fan of it in the equity market and the bond market. One way to think of ETFs is they let every investor invest like the largest institution in the world, right? That's a really cool thing about ETFs. I can buy the same Bitcoin ETF as Harvard's endowment. I think that's pretty cool. You can package these complex trades and make them available. The risk of it is you have to do a very good job explaining it, right? The number of investors who don't understand that a 3x ETF can go down when the underlying market goes up over the course of a month. It's actually very simple math to explain it, but the number of people get it is challenging. So you need explanations, but if you can do it, it's fantastic. Why should institutions have access to that trade and not me? It doesn't seem right. Bitwise is definitely looking at it. We think there's a sequence that people get interested in it,
right?
But I think things like those buffered ETFs and things, if you can explain them well, will eventually be a very big.
We need an R fix or P fix for Bitcoin, just constant, super long call.
I think you'll get that.
That's
once you unleash. I mean, the ETF innovation machine is a little bit like the crypto innovation machine. It will stretch as far as the market allows. And now that we can do these things, I think you'll see them happen pretty fast.
Do you think obviously we're all excited and bullish and everything, but can you foresee any sort of potential tail? Obviously, we just had Friday where it's all right, a bunch of retails on perp dexes and they all got liquidated, and it's all right, well, now we're introducing covered call ETFs and things like that. Obviously for that it's somewhat safe for the average retail, but if you get into these things that are a bit more sophisticated, do you see any potential tail risks start to emerge? And is that solve for that just better education, like you were saying?
So the risk is, from my perspective of complex ETFs, is that people buy them who don't understand them, and then they blow up, and then they sue the ETF issuers, and they look poorly upon the industry. That's been happening in ETFs for the last 20 years. There was a inverse volatility ETF, XIV, that famously went up.
The oil ones. In the 2020.
Oil ones went negative, and the 3x negative financials ETF returned negative during the financial crisis, which blew people's minds. So that is the big risk. Is there any like reflexive risk into the market? I'm not sure. We're pretty good at levering up in crypto. I don't think ETFs are gonna. I don't think we need ETFs to do more of that.
Have helped the volatility structure of Bitcoin.
Yeah.
Whereas everything else.
That's definitely right. And for what it's worth, like ETFs fail all the time. They close all the time. They don't raise assets. They don't get flows. I think if we launch like a dozen, even the first dozen, there are 2 or 3 assets that I would be surprised if it got any flows.
Yeah.
So that's normal. But the blow up risk is really you introduce a complex ETF. Do people understand it?
Yeah.
That's really the risk.
That makes sense.
Yeah.
What about the option space on ETFs? I feel like the last time we talked, we started to talk a little bit about it. And it's just sort of like, well, we'll see where that will take us. Obviously, they're all now in play. What's your read on the options landscape on ETFs?
Yeah. So just to be sure, do you mean the growth of options on ETFs, or do you mean sort of option income strategies that we've seen?
Oh, the growth of options, like just having option chains on ETFs, and it's like comparing that to people are trying to do like on-chain ETFs for like direct crypto exposure, but I was always pretty bearish on them just because the spreads are so horrendous versus something like, these classic Bitcoin ETFs where the liquidity is a lot better.
I mean, look, from one perspective, ETFs and option on ETFs are a bridge to our tokenized future and our decentralized future.
Right.
But that bridge is going to extend for 10 years. Yeah. So right now, I mean, there's more IBIT options than there are Bitcoin options on Deribit.
Yeah.
Right.
Yeah.
So it's it's like the old meme about who's the captain of the ship. That is now the ETF TradFi landscape. Yeah. Broadly speaking, it's just good.
Yeah.
Broadly speaking, it's a different set of investors, which should reduce volatility, reduce serial correlation risk. And I think that's generally true. There are exceptions to that. So one exception, one of the reasons I think Friday was as big as it was is that traditional investors now use Bitcoin to react to markets. Yeah. Traditional markets are closed. That wasn't true 2 years ago. And now I think everyone reaches for that Bitcoin button. So that's an example of like the negative externalities. But broadly speaking, it's a net good. Yeah.
Yeah. I enjoy the safety infrastructure, integrity of traditional brokers. I think, crypto space has graduated, but still, I think most people prefer custody in existing players, and also the liquidity and things of IBIT options. But what's the timing, do you think, towards like that? The 24/7 is the biggest, but traditional guys don't care, I guess. But it is. That's a downside.
Yeah. So there are 2 forces to keep in mind. One is when regulation unleashes real 24/7 markets in a tokenized fashion in a way that most of the money cares about.
Right.
So I would guess that that's like a 3 to 5 year thing. I don't think it's tomorrow. And the second is, when do young crypto native people have money? Because every generation gets its version of a broker. There's the Charles Schwab generation, and then there was the E-Trade generation, and now there's the Robinhood generation. And you can see that Robinhood now really matters because the people who grew up with Robinhood now have actual wealth. I think the thing behind Robinhood is sort of a crypto native generation. I think that'll be the first generation that makes tokenized stocks. But those people, it'll take them 10 years to have real money. So I think it's coming, and there are probably these 2 phases. But it's not tomorrow. I'm very excited about it, but it's not tomorrow.
Yeah. Anything novel when you talk to these institutions in terms of the next 12 months of what they're excited? Obviously, there's stablecoins, Bitcoin they're sold on. Anything else there that's super interesting that you've been hearing?
Well, so first I would say their interest in stablecoins is just off the charts.
It's just insane. Yeah.
It's off the charts.
Yeah.
It's equal to or more than their interest in Bitcoin. And they love to find out how to invest in it. It's the first question I get.
Yeah.
So that's the big. The second thing I'd say about that group that maybe is non-obvious is the amount they're willing to invest is now significantly higher.
Yeah.
So to put data on that, for the first 7 years I was at Bitwise, the only thing you could talk about in polite company was a 1% allocation. Morgan Stanley just put out a paper saying go up to 4.
Wow.
Right, which is
magnitude,
the 4x.
Yeah.
I mean, that's a lot more, right? That's a lot more. And we, in our own research, we used to show 1 to 5.
Yeah.
Now we show 1 to 10. Why do we show 1 to 10? Because an increasing number of people talk to us about having a 10% allocation. So they're expanding out. In terms of where they're investing beyond Bitcoin, ETH, Sol, tokenization, that's sort of where it ends. They're also very interested in crypto equities. I think Circle's IPO put that on people's minds. But they're really just in this 2-story, Bitcoin and tokenization.
Is Vanguard talking to you guys yet?
I've emailed my guys at Vanguard. They'll come along.
Yeah.
they're gonna have to.
Look, Vanguard initially hated ETFs.
Yeah.
They said ETFs were like giving candy to an infant. And
Now
retail,
they're like the biggest,
and now they're the biggest player in the world.
Yeah.
So I almost don't want to say this because I don't mean it seriously, but there's a world where we wake up and they're one of the biggest players in crypto. They're one of the largest holders of MicroStrategy in the world. They're a very big dog, but they're coming along for sure. Everyone, we should forgive people who are anti because they all convert, right? You can find Michael Saylor tweets where he hates Bitcoin. You can find Larry Fink talking negatively about Bitcoin. Eventually, even Jamie Dimon will say good things about the market. You can see him coming along. So Vanguard will get here. We'll get there.
Yeah, for sure.
Welcome. Yeah. With open arms.
Welcome them with open arms, right? And there's nothing like the zeal of the converted. Just look at BlackRock.
Oh, yeah, 100%. So, you're hearing that allocation size is increasing. You're saying 4%.
Yeah.
That's sort of common where they're all
I think
higher?
5%.
Yeah.
Oh, they're all going higher.
Yeah.
1% is rarely talked about now.
Right.
I think 3 is probably the median, and 5 is completely.
When do you think they'll get to like 100% 3x levered?
That's true. Probably by December. Yeah. They will get there. They will get there. But it's really changed. It's really changed dramatically.
Yeah.
And I think one reason is volatility has come down. As volatility comes down, mathematically it goes up. The other is that the binary risk. The reason it was 1% for so long was that there was a risk that crypto didn't work, and then it would go to 0, and they
in your capital,
and they would get fired. I think that binary risk has disappeared from their minds, and so now it's like, well, if we're doing it, let's do it at 5.
Yeah. Is there much interest for like a debasement ETF that's like 60% gold, 40% Bitcoin?
Yes, there's a lot of interest. So we have a gold Bitcoin ETF in Europe.
Oh yeah.
We filed about, but can't talk beyond the filing. Doing a debasement ETP in the U.S.
Nice.
I think it's worth noting, if you're interested in hard assets and you're 100% gold, you're off the market, right? The market is saying it's 90-10. 90-10 would be the base. If you're at 0, if you're 100% gold, 0% Bitcoin, you're effectively short Bitcoin against the benchmark of what the globe is telling you is global stores of value. So I think there's a lot of interest in at least being on benchmark. 60-40 is better than 90-10, but 100-0 is like mathematically wrong.
Yeah.
There's a lot of good some people put out about how important gold is to an equity portfolio, and how even 50-50, particularly the last few years, cuts fallen like a third, and your returns have been the same / slightly better, and with more optionality when you have
like
drawdowns.
60 gold, 40 Bitcoin has like a higher, I think, risk-adjusted return or something than
Just very well could.
just on the road.
But even Bitcoin's fall coming now, like barely even creeping above 40, 45 is like that's less than most big large cap equity.
Yeah, it's gotten down to that level. It's really been remarkable.
It's crazy.
Yeah.
MicroStrategy itself is 45.
Yeah. And the response to that again is a bigger allocation size. And so there's almost a reflexive loop
Right.
there, which I think is important. Yeah.
We don't appreciate the mathematical reasons for why these things how much it's like how much of the equity world flows and moves off systematics and vol control and passive and exposure levels there, and how that also applies to adopting these new asset classes and lower volatility, higher growth. It's mathematically
They have to.
yeah, you don't need, we're always trying to paint this qualitative, beautiful mosaic of why adoption's, going to keep going like this. And, they have to, and because the governments and and there's some more simple just math.
Yeah, they put it into a program.
Yeah.
And it spits out a number. And today that number is higher than it was 2 years ago, so they invest more.
Yeah.
It's actually an important point.
Yeah.
To that point, we published our first piece giving long-term capital market assumptions on Bitcoin to provide forecasts of what those numbers are. Before this year, no one asked us for it. So they're just starting to plug it in. And when they plug it in, it tells them they should own some Bitcoin, right? And so they're going to.
Well,
yeah.
Anything else you're excited about that we didn't cover?
Ooh, what am I excited about? I am really excited. I'm really excited about the broadening of the ETF landscape.
Yeah.
Because crypto tells a much better story when you're talking about all the things it can do than if you're just talking about Bitcoin. And I think that's really changed. I'm excited about the downstream. I've been thinking a lot about what the second order investments are to the stablecoin boom. I think many people want to invest in stablecoins, and so they buy ETH and Solana and Tron and Circle.
Yeah.
But I think if you have an enormous growth in stablecoins, you're going to see an enormous growth in DeFi. I think there's some interesting second order effects to stablecoin growth that people probably aren't paying attention to yet. So I'm excited about that. But mostly, I don't know. I think it's never been a better time to invest in crypto. So I'm just excited to watch the market grow. Yeah.
I love it. All right. Matt, always good to have you on.
Thanks for having me.
Yeah, love it. Appreciate it.
Yep.
Yeah.
Great chat.
Thanks.